Probably the biggest advice that I would have is that if you've got a solid plan in place, stick to the plan. The plan is built to sustain some of this volatility, whether you're retired or you're younger in that accumulation phase. I think it's important to lean into that plan. This is not the time to lean away from that plan. What we tend to do is we monitor with the help of our partner Fidelity. We monitor with them some of the global economic events that are happening, make adjustments to our portfolio accordingly. No pun intended here, but just weather the storm.
Hi, I'm Luke, Strategy and Planning Manager with Fortress Financial Group here in Rochester, Minnesota. I'm joined today by Dan Langworthy, founder of Fortress Financial Group. And we're talking today about tariffs and turbulence. Dan, it's been a wild week in the market, as we all are aware, and I'm sure many of our viewers are as well. What triggered all of this, and where are we going from here?
Well, obviously, it's a timely topic. And as most of us are aware of, there was tariffs that were enacted back at the beginning of April. And I think we all kind of anticipated something like this, but maybe not quite to the extent that we saw. In fact, it was very broad. Mm-hmm. We saw 10% to most countries. The European Union saw a 20% increase, and China was north of 50%. Mm-hmm. So I think that in and of itself put kind of the fear in the uncertainty of what's next. Was there going to be another shoe to drop?
It was a dramatic move, and I think they called it the Day of Reckoning, almost turned into a week of reckoning, it felt like. Have we seen this before?
Yeah, we have. And, during the time that these tariffs were announced, the Dow Jones Industrials dropped about 2,200 points, and the S&P lost almost 6%, and the NASDAQ was similar. I think 5.9%. But yeah, we've been down this road before, and this reminds me back in specifically 2018 when we were at kind of a trade war with China in February. We saw the Dow Jones drop almost 1,200 points. Mm-hmm. But I would say more recently, in March of 2020, was the most dramatic or the biggest drop we've seen, and that was in the pandemic. Better known as COVID. Mm-hmm. And we saw the Dow Jones Industrial drop 2,900 and some points in one single day, which was 13%. And so, yes, we've seen this before. I think the policy itself might be a little bit different, but this isn't the first time that we've had turbulent times.
So with this kind of drop, you're saying things generally have worked out positively. Mm-hmm. in the near future following the drop. Is you think that's the same thing for this iteration, or?
Yeah, I think underlying economy is very strong. We came into the beginning of this year and things looked very strong. The biggest worry has always been inflation, mm-hmm. and it looks like Powell, our Fed chairman, has got that contained. And so inflation is contained. Unemployment's been low. After we saw the big dramatic drop of 2,200 points on the Dow, the next Friday, just a few days later, we saw the Dow increase over 900 points, mm-hmm. and that was mainly set by earnings. So I think GDP looks strong. And so when we look at the overall business cycle, we feel pretty optimistic about it.
So despite the headlines and everything you hear in the news, almost gives you a pit in your stomach sometimes with everything happening. Sounds like fundamentals are telling us a different story.
Yeah, fundamentals, I think we've set up kind of a backdrop here that the conditions are such that the Federal Reserve was in their cycle starting to cut interest rates. And then obviously the tariffs happened, and the economy, quite frankly, was doing pretty well. So the Fed didn't really feel like there was a need to cut. But I think this sets us up well for that. And of course, once the Fed starts cutting interest rates, when we look back historically, when the Fed's done that in the past, mm-hmm. That makes borrowing much more attractive for consumers and for businesses alike.
We recently sent out a letter to clients, and there are some good analogies in there. Any of those that you care to expound upon?
Yeah, we sent out a couple of letters. The first one was called Tariffs and the Weather. And kind of the analogy or the theme of that letter was really that there is no bad weather, there's only bad clothing. Mm-hmm. And so as we look as a planning-centric type of firm, when we look at that, we try to equip our portfolios, i.e. the proper wardrobe, to weather the storm, if you will. So in times like this is really what we design our portfolios for, is to try to weather this storm. The second letter that we sent was basically tariffs and the market reaction. And I kind of alluded to it earlier. And overall, when we see these volatile times, Luke, it's more about the uncertainty of what's next. How bad is this going to get? Again, we saw that in 2018. We saw it again in 2020 with the pandemic. And it's not necessarily the policy itself that people are worried about so much as it's just the unknown.
Any final thoughts on people that are feeling uneasy? Any words of advice, some wisdom?
Probably the biggest advice that I would have is that if you've got a solid plan in place, stick to the plan. In other words, if the plan is built to sustain some of this volatility, whether you're retired or you're younger in that accumulation phase, I think it's important to lean into that plan. This is not the time to lean away from that plan. And, what we tend to do is we monitor with the help of, our partner Fidelity. We monitor with them some of the global economic events that are happening, make adjustments to our portfolio accordingly. And, no pun intended here, but just weather the storm.
Sound advice. Absolutely. Thank you, Dan, for the insight. And thank you all for watching. We hope to keep you informed and keep the conversation going. Dan? All right. With pause. Let me think about where I'm at here.
You kind of jumped all over the place here.
Hope you stop by soon, and we'll cut that there for a second.
So how you could just end that is just to say, and we'll keep the conversation going.
And we'll keep the conversation going. And we'll keep the conversation going. We'll keep the conversation going. More smiling? Here we go. All right, take 16.
That's it.